it's a story of two cities pretty much. Right? You've got urban consumption, rural, the worries obvious for everyone to see. But let's talk about one star since October 28th, and that has been Waaree Energies. Remember, they listed on the exchanges on the 28th of October at 2,550 a piece, which was at a premium of 70% over its IPO price of 1,500. It's been on a one-way rally, trading at 3,114 is where it's closed yesterday in the session since its listing day. Now they've reported numbers. Numbers have seen a spike in revenues supported by EPC contract segment, which registered a 257% growth to 516 crores in the second quarter, compared to 144 crores in the same quarter last year. EBITDA was flat, higher by 1.5%. Margins were also largely similar to what was posted in the same quarter last year at 14.7. Net profits were up 17%. Now, what stood out for Waaree Energies is that their order book for renewable energy stood at 20 gigawatts as of September 30th, 2024, clearly showing customer confidence in execution. The board of directors have also approved an aggressive investment of 6,000 million for setting up development of infrastructure for the purpose of developing renewable power. So lots of factors working for Waaree Energy. They've delivered strong earnings. Street should be impressed, but remember, the counter has significantly ran up since listing, so do not expect too sharp a rally in trade, but who's to tell what happens to this counter. The other one, smaller though, but worth the mention is, actually no, this isn't a small one, is AstraZeneca Pharma. They are launching and have got approvals to launch Brett's Re-Aerosphere in Jan 2025. This member is for patients who are struggling, who are suffering from chronic obstructive pulmonary disease, more commonly known as COPD, for adults. We will try and understand the market size, the competition in this space, but for now, this is good news coming in for AstraZeneca. PG Electroplast, again, this is qualitative information. Be good to get some quantitative analysis once we talk to the management. But their arm, which is a wholly owned subsidiary of the company, has entered into an electric vehicle assembly and lithium-ion battery assembly. So this is interesting. Again, we will try and talk to PG Electroplast to get a sense of what this means to the company. But in my sense, three positives: Waaree Energies, good numbers; AstraZeneca, positive development; and PG Electroplast subsidiary is also positive.
Okay, so good day if you can pick three positive stocks coming in. But yeah, the first one on mine definitely is.
You can do it too.
Yeah, I'm talking about ITI. I think two positive, one mixed, I would say. ITI is thumbs up. Just because the stock is running. The size of the contract that the company is bagged is not massive, 95 crores for NDTTS is the contract in Uttarakhand. Contract period is of 5 years with the government of Uttarakhand. They will be installing systems at 40 checkpoints across the state. This is for prevention of illegal mining and mineral transportation. MDTTS, of course, is the Mining Digital Transformation and Surveillance System. Those are the devices that ITI is going to be putting out. But this is a stock which has had a few good days of running up, definitely. So you could see some action on ITI today, on a day when otherwise there's not too much news flow. We always get this feeling once, you know, result season comes off, when suddenly the news flow in terms of companies trickles down. So ITI definitely in focus. ONGC and NTPC, I mean, this news came in during the closing hour yesterday, but could be in focus today simply because the NTPC Green IPO also opens today, so which is why a thumbs up. Both companies have incorporated a joint venture called ONGC-NTPC Green. It's a 50-50 joint venture between the wholly owned subsidiaries of both. So between ONGC Green and NTPC Green Exploration Limited, what they will be doing is exploring and setting up renewable energy projects through greenfield development and acquisitions. The JV will assess establishments of offshore wind projects. Just the timing of it could see some boost both on ONGC and NTPC. Of course, Amina will have a more detailed report on NTPC Green in just a couple of minutes from now. Public sector stocks are the other one, and Neeraj, you talked about it briefly, but I'll just go into a bit of detail on what it is. Now, I think what is important in this is the revision of guidelines on capital restructuring of CPSEs. That's central public sector enterprises. So every one of these companies which are listed, publicly owned listed companies will have to pay a minimum 30% of their profit after tax or 4% of net worth as dividend. The 30% rule was already there. Remember, these guidelines have been revised after 8 years. So we'll have to wait and see what the impact is. The 30% rule was there, but the net worth as dividend criteria was 5% earlier, which is now 4%. Additionally, what has been carved out this time is financial CPSEs, including NBFCs, etc. So look at an Waaree, CPSE, stocks like that. They will have to pay a 30% profit after tax minimum annual dividend. So here, the 4% guideline of net worth is not there. It's just 30% straight. This is effective from the current financial year already, and capital restructuring of these companies will be handled by the Interministerial Forum. The DPUM secretary will be leading the committee on this. So now this could be quite specific to each company, but for some companies, the dividend amount will actually go up, which will be seen as a negative. So we'll have to go into a bit of detail on the impact for each company, but also, it underlines the basic premise that even while markets celebrate publicly listed companies, at the end of the day, they are government owned, and the government has a right to come in and pull out that dividend whenever it so needs. So that's one underlying risk that these kinds of companies have always had. It has been brushed to the side because of the fantastic performance in the last few
but the
years.
dividend will be for all shareholders, not just the government. So in some sense,
but the biggest shareholder is the government,
which is fine
in every case.
Yeah, but thankfully it's not going out to particular shareholder, but to all shareholders. So higher dividend actually not be bad in some government companies for sure, because at times you feel.
I guess this today will be a case by case basis, so we'll have to wait and see how it pans out.
Yeah. Okay. So those are three. I have one name and then two brokerage stocks. So one is a set of stocks, Themis Medicare and Gujarat Themis Biosyn. I've given a thumbs up to this. The reason being, and by the way, no fundamental analysis here, just arithmetic. Gujarat Themis Biosyn will be merged with Themis Medicare. Themis Medicare will issue 118 shares for every 100 shares held by shareholders in Gujarat Themis Biosyn. Now, the key is the swap ratio is in favor of Gujarat Themis Biosyn by over 10%. So you probably expect Themis Medicare to correct a little or Gujarat Themis Biosyn to gain effectively a 10% difference between the two based on the swap. So keep an eye out for Gujarat Themis Biosyn on the upside in the session today. So that's the first one on my list. Citi's come with a note on Indus Tower. It's interesting because I think they make some interesting points. So they've reiterated a buy with a target price of 485, and they've opened a 90-day positive short-term view on Indus. Now, why they've done this? Of course, Indus is corrected by about 28%. They mentioned since the announcing of the share buyback, but the reasons, they believe some of the positives are being ignored. What are these? Upcoming pickup in tenancies from Vodafone Idea starting third quarter, which is the current quarter. They say it's being ignored. Acceleration and recovery of past dues from Vodafone is being ignored. The declining capex will aid free cash flow generation according to Citi, and they believe there is improving visibility of dividend reinstatement by Indus from fourth quarter FY25. All of it might actually be positive. So keep an eye out for Indus Tower in the session today. That could be interesting. And we'll talk about Suzlon a bit later on, but I'll also watch out for Fusion Micro. The stock is corrected 18-19%, was down 5% yesterday as well. But the concerns that have been shared by the company around it remaining or not remaining as a going concern might well plague the stock today as well. So keep an eye out for this one. May not necessarily see a speedy recovery.
Just on Suzlon, since you mentioned it, important note from Morgan Stanley. So you might see an upside on it. Morgan Stanley has upgraded Suzlon Energy to overweight and cut the target to 71 versus 78 rupees. That's still a 20% upside. That's because they say the stock's steep 35% correction from its 52-week high offers an opportunity. Strong factors because they have a business moat, large 5.1 gigawatt backlog. By business moat, simply put, that it's not easy for other companies to replicate what Suzlon has done. They expect the company's market share to rise to 35 to 40% by FY27 versus 25% in FY24. The sales volume, though, the estimate has been lowered to 1.3 gigawatt versus 1.5 gigawatt earlier. Key risks are capacity addition delays, higher OPEX, and higher competition. So